So this is your teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question of A2 Accounting from A2 Accounting 9706, and the topic is budgeting. So I'm hoping that this question will come in the upcoming exams of October, November 24, variant 42. So this question, I can't suggest that which topic will come, but budgeting question will come, which might include production budget, purchase budget, trade receivable budget, trade payable budget, or a cash budget even. Always remember that preparation of cash budget is little easier than other budgets because it might not include very technical things, or normally a student used to do that actually to a certain extent. Obviously, going for the question 100% correct sometimes becomes very difficult for everyone. It's not about it will be difficult for only one of the person. It is difficult for every student. So today we are going to discuss the question of budgeting, which has come in October, November 23, 42. So October, November 23, 42. I'm expecting such type of question in the exam in October, November 25, 42. So the question wanted us to prepare a production budget, purchase budget, and a trade receivable budget. So what is the format of a trade receivable budget? Let's discuss that first. Trade receivable budget, right? Spelling is just wrong, no problem. So trade receivable budget is basically just like a sale ledger control account. It's just like a sale ledger control account. So you know that on the debit side, we used to write in a trade receivable, in a total trade receivable account, in a sale ledger control account, we used to write on the debit side balance brought down of trade receivable, which might be said as trade receivable at the start. You can write balance brought down even, doesn't matter. And on the debit side again, we used to write credit sales. Yes, credit sale comes on the debit side of SLCA. So same is the case with the trade receivable budget. On the credit side, we used to write receipt from trade receivable or cash received from trade receivables. And then we used to write discount allowed if need be, if given. And then comes the, after subtracting from the debit side, we will get the balance carried down or the trade receivable at the end. So in the same manner, we are going to prepare the trade receivable budget, but it is going to be in the statement form. That is the reason that it is going to be in the statement form. I'm going to write trade receivable at the start, then add credit sale. I'm going to add credit sale into this. Then I will subtract less cash received from trade receivable, whatever it is going to be. Then comes discount allowed if given in the question, right? And then we used to write, after getting the total, we used to write trade receivable at the end. Yes, you can write balance brought down, you can write balance carried down, doesn't matter at all. Let's move to the question now. October, November 23, 42, topic of budgeting from A2 accounting. So let's see the question. Source B for question number 2. T Limited manufactures single product. The budgeted information for March is as follows. The selling price will be fixed at $20 per unit. So selling price of one unit is $20 per unit. March sales are expected to be 20,000 units. So 20,000 units into 20, we will get the amount of total sales, whatever it is going to be. There will be a 10% increase in sales volume in every month up to June, and the sales in subsequent months will remain at the same level of June. So it means that in March, the unit sold at 20,000, then it will increase by 20% in April, May, and June. But from June, after June, it will remain the same, whatever it is going to be. Credit sales are 75% of the total sales. So it means that 25% are cash sales and 75% are total credit sales. 40% of credit customer will pay in the first month after the sale and receive a 5% cash discount. And the remainder of the credit customer will pay in the second month after the sale. We will discuss that point later on, inshallah. Next, the finished goods inventory level is budgeted to be 25% of the following month's sales volume. It is very easy. At the closing inventory, of units for production budget is 25% of the following month sales. Each unit requires 4 kg of direct material. It is for purchase budget, which costs 1.5 per kg. The closing inventory of direct material is expected to be meet 50% of the production requirement in the following month. So closing raw material is going to be the next month, 50% of the next month production requirement, as we used to do this in some examples in the past also. Now let's move on to the next part of the question. State 3 advantage of budgeting. Obviously, budgeting is a device for planning and control, right? It is used so that we can find the actual results and we can compare the actual results with budgets in order to take corrective actions where we are getting more outflow of resources. Then, but a budget is a communication device. It is for planning, controlling, communicating. It is used for motivating the employees, because if you will prepare a budget and you will assignment, it is also used for assignment of responsibility and delegation of authority, because you delegate the authority to the employees that, okay, this is your target. And if they achieve that target, employee will feel motivated, their morale will go up, and they will get performance appraisal also, right? And budgets are also used for decision making, right? It is. So these are the advantages. Prepare the following budgets for each of the month of May and June. Trade receivable showing the opening and closing balance for May and June. Then production budget in units, and then purchase in dollars. So we have to prepare that. So first, I'm going to prepare the trade receivable budget, which is an important one because we have not prepared trade receivable budget up till now. Although you can find lots of questions I have uploaded on my YouTube channel and accounting with Sir Harris. Okay. The selling price will be fixed at $20. March sales are expected to be 20,000 units. So let's find the sales first. I'm going to write here March. Remember this, that trade receivable budget I need to prepare for May and June. So let me write here, because I'm going to prepare the budget for May and for June, only for 2 months. Sir, what you are going to do, I am going to find the sales of March, April, May, June, and even if given July, I can go for the I can find the sales of July also if given, which is not required actually. So the first thing, sir, why we need sales? Because trade receivable budget is basically prepared not in units. Production budget is prepared in units. Purchase budget is prepared in kgs and then will be transferred by multiplying the kg per unit in dollars. But trade receivable budget is always prepared in dollars amount. So I need the amount of credit sales so that I can find the trade receivable at the start and all the things, whatever is required in the question. Okay, so let's see. If you just look at the question, the March sales are 20,000 units into 20. So I will write here the units. Multiply by 20. So what is going to be the amount? That is going to be 4 lakh, if I'm not wrong, right? Then it is increased by 20%. So 20,000 into 20% becomes 4,000. So the April sales is going to be 24,000 and multiply by 20. So the answer is going to be 4,80,000. Then again, for May, the sale is going to be increased again by 20%. So how you are doing that? So let me explain you. It is clearly stated that the March sales are expected to be 20,000 units and there will be 10% increase in the sales volume. Volume means the units in every month up to June, and then it will remain same. And the dollar selling price is fixed at $20 per unit. So 20,000 into 20, it will become 4 lakh. Then 24,000 into 20, it will become 4,80,000. Now 24,000 into 20% is going to be, I believe, 4,800. 4,800 plus 24,000 is going to be 28,800. And multiply by 20, we'll get the May sales. Can you please tell me what is the amount of May sales? Yes, please. 28,800 into 20, because the selling price is fixed. I think I have done something wrong. Why, sir? Because the March sales are expected to be 20,000 units and there will be increase of 10% increase in sales value, volume. So 10% increase is not 24,000. I'm sorry. 10% increase is basically 10%. 20,000, 10% is 2,000, right? So confusion, I have gone for a little bit. So 20,000 into 10%, 10% increase, it becomes 22,000. And then you can multiply it with 20 to get the April sales. That is how much? I think 4,20,000. Then again, there is going to be increase in of 10%. This is going to be 2,200. 22,000 into 10%, 2,200. So it will become 24,200. Sorry, the May unit sold. Now 24,200 into 20, what is the amount? Now you can tell me. 24,200 into 20, what is the amount? You can tell me. I did something wrong actually because 10% increase in sales value. So 20,000 March sales, 10% is 2,000, 22,000 is going to be the April sales. And then again 10%, 2,200, 24,200 is going to be the May sales into 20. What is the amount of sales in May? Then again 24,200 into 20%. प्लस कर देंगे उसमें into 10%, that is 2420. So 2420, 10% of 24,200 is 2420. So 2420, 200 plus 2420 is 26620. So that is going to be, 26620. That is going to be the sales for June. But I need amount. So that will become 4,84,000 for May. And 26620 into 20, that will become going to be 532,400. 532,400. So that is going to be the sales, total sales we have calculated. Now I need to find the credit sales. Sir, why? Because in preparation of trade receivable budget, we need credit sales, not the total sales. So it is clearly stated that the credit sales are going to be the 75% of the total sales. So 4 lakh into 75%, which is going to be the credit sales. So it becomes 3 lakh is going to be the credit sales for March. Sir, how does it come? Let me clear you. Credit sales are 75% of the total sales. So in March, the total sales are 4 lakh. So 75% of the total sales are going to be 3 lakh. Now for April, total sales are 4,20,000. 4,40,000, I believe, sorry. And the 75% of this is going to be 3,30,000. This calculation has gone wrong little. I am not using calculator and you people are not telling me also. Now I'm just making it correct. That is 4,40,000, right? Because if you multiply it with 20, 2 2s are 4 actually. And then you have to calculate it. So 4,40,000 is the sales of April, and 75% of this is going to be the credit sales, which will become 3,30,000 for April. Then 4,84,000 is the sales for May, and 75% of 4,84,000 is going to be 3,63,000. Then for June, the sales is going to be 532,400, and 75% is going to be the credit sales, that is 399,300. So now we are done with the amount of the credit sales we have calculated. Now, first of all, I want to know, I can write the credit sales of May and June, which is for May, the credit sales is going to be 3,63,000. And for June, the credit sales is going to be 399,300. But the problem is this, that I need to find the trade receivable at the start, which is going to be a difficult task. Why? I will let you know about that why it is going to be difficult. Because trade receivable at the start means that at the end of April, how many trade receivables are there, which is supposed to be paid in the next months? So all the trade receivable which are there at the end of April are going to be the trade receivable at the start of the May. So I need to find the trade receivable at the end of April, at 30th April, because they are the same, which are the trade receivable on 1st May. So let's see now. It is stated that 40% of the customers will pay in the first month after the sale and receive a 5% cash discount, and the remainder of the credit customer will pay in the second month after sale. It means that 40% are basically paying next month, and the remainder is going to pay in the second month. I repeat again, whatever be the sales, 40% of the customers are paying in the next month, means 1 month after sale. And the other 60% are going to pay in the second month after sale. So let's see. It means that in March, the amount is 3 lakh, 40% will pay in April, and 60% are going to pay in May. It means that at the end of April, we have trade receivable from March, that is 3 lakh multiplied by 60%, and that is going to be 1 lakh 80,000. I repeat again, it's an important point. In March, the sales are 3 lakh, 40% of the customer will pay in April, that's fine. And the remainder will pay in May. It means on 30th April, 3 lakh sales of March, out of that 60% have not paid yet because they are supposed to pay in May. So they are the trade receivable. Okay. And on 30th April, 3,30,000 of April sales total is going to be the trade receivables total amount, because out of 3,30,000 of April sales, 40% is still to be paid in May and 60% is going to be paid in June. So I'll go for the total of this. The total trade receivable at the start of May is going to be 5,10,000. So I will write here 5,10,000. That is the difficult point in the question. Now let's talk about the trade receivable at the start of June. So trade receivable at the start of June are the same trade receivable, which should be trade receivable of 31st May. 31st May trade receivables are the trade receivable at the start of the June. Same, this is going to be the May trade receivable, which are supposed to be the trade receivable on 30th April. Okay. Now let's move on. So 1st June, how many trade receivables we have, which are the trade receivable on 31st May. So let's talk about 31st May trade receivable. Let's start from the very scratch. On March, sales were 3 lakh, 40% are paid in April, and the remainder are paid in May. So they are done. Nothing has been left from March sales to be paid in June. 40% is paid in April, and the remaining 60% is paid in May. That's it. So on 31st May, all the March sales customers have paid the amount. Now let's talk about April. April sales, out of April sales, 40% has paid in May, and the remainder is not yet paid. They are supposed to pay in June. So on 31st May, they are still our trade receivables. So 3,30,000 multiplied by 60% is going to be the trade receivables from April sales. We have trade receivable on 1st June. We can calculate. And they are going to be how much? If you can calculate for me, 60%, 198,000. I remember, if I'm not wrong. And the May sales is completely not yet received in June, because 31st May, all the May sales is yet to receive. Because 40% are supposed to pay in June, and the remainder 60% are going to pay in July. So all the sales of May is going to be our trade receivables. So the total of this 561,000 is going to be the trade receivable at the start of June. Now we are done with this. We have found the trade receivables. You can write here. Yes, if you want to write, you can write here. This is from March sales. This is for May sales. Sorry, March and April sale. And same is the case here. This is from April sale, the remaining April sales. And this is basically for the whole amount is May sales, which are supposed to be the trade receivable on 1st May and 1st June. Now let's go for the total of this. That is going to be 8,73,000. And here I have to calculate the total now. I don't have it. Can you please tell me the total? 960,300. Please check it out if I'm not wrong. Now I will go with the cash received from trade receivable. So I will write here. The cash is going to be received in two different dimensions, from two different months. One is going to be 1 month after sale, we are receiving cash, and the other is 2 months after sale, we are receiving cash. And then there is going to be discount allowed also, obviously. So now let's see. 1 month after sale, in May, we will receive cash 1 month after sale started from the March. Start from March. So March sales is 3 lakh. March sales is 3 lakh. What is the criteria? Listen again. 40% of the customer will pay in the first month after the sale and receive a 5% cash discount. And the remainder of the credit customer will pay in the second month after the sale without any discount. So in March sales, 40% will pay in April, right? And the remainder is going to pay in May, which is second month after sale. And that is 3,60,000, which is the trade receivables. And I'm going to write it over here, 1,80,000, right? I will repeat again, you will be able to get to know about this. Now let's talk about the April sales. 3,30,000 is the April sales. 40% is going to receive out of 3,30,000, 40% is going to receive in May, but after a 5% discount. So let me calculate here. 3,30,000 into 40%. What is the amount? Let me calculate. I don't have my calculator. You should 3,30,000 into 0.4. That is going to be 132,000. But the whole amount we are not receiving. Why? Because those customers who are paying after 1 month, we are giving them 5% discount. So 132,000 into 5%, that is 6,600. So 6,600 will come in discount allowed in May because that is not received from April, 1 month after sale in May. And the remaining we are getting means 132,000 minus 5%, which is 6,600. The remaining is 125,400, and we are getting this. So that is the amount we have received. Now, out of 3,30,000, 40% is received from April sales in May after a discount allowed of 6,600, which we have already written. And the remaining 60% is going to be received in June, next month after sale, 2 months after sale. So 3,30,000 into 60%, that is 198,000. That is going to be received 2 months after sale. Sir, why 1,80,000 has come? Listen again about this. March sales is 3 lakh. 40% will be received in April. And we are not preparing the budget of April. Otherwise, I could have written it down. And 60% is going to receive in May, 2 months after sale. So in May, from March sales, which is 2 months after sale, we are receiving 1,80,000. Total amount without discount. Now in June, we are receiving 40% from the sales of May. that is 3,63,000. Sales of May is 3,63,000 into 40% we are receiving in June, and the remaining 60% is going to be received in July. We are not preparing the budget of July, but 3,63,000 into 0.4, that is 145,200. The problem is this, that we are not receiving 145,200 fully. Why? Because if we are getting the amount 1 month after sale, means the May sales, 40% of May sales, which we are going to receive in June, we are not receiving it fully because there is a 5% discount. 145,200 into 5%. The discount is 7,260. So I'm going to write discount here. That is 7,260. And the amount we are going to receive, that is going to be 145,200 minus 7,260. Because that is not received actually. That is 137,940. Okay. That is 1 month after sale. And the remaining sales of May, 60% is going to be received 2 months after sale in July. Actually, we are not preparing the budget of July, but I can write it down also. 3,63,000 into 0.6, that will become 217,800. I'm just writing it just for the understanding purpose. Now let's go for the total of this. Total of the, and we can get the trade receivable at the end, and that will be the answer for the question. So let's go for the total of the payment side. 125,400 plus 1,80,000 plus 6,600. That is 312,000. Let me write here. 312,000 minus 8,73,000. We'll get 561,000. And see that 561,000 is going to be the same opening balance of the June. So it means that we have solved it correctly. Means the trade receivable at the end. The ending balance of trade receivable at the end of May is going to be the starting balance of June. तो सर फिर तो हमें जून का निकालने की जरूरत ही नहीं थी। ये जब हमने निकाला था जून का ओपनिंग बैलेंस, मैंने समझाने के लिए बताया था ताकि आपको कैलकुलेशन करनी आए हर साल में। ओके, नाउ लेट्स कैलकुलेट द पेमेंट्स ओवर हियर। 137,940 plus 198,000 plus 7,260. That is 343,200. Now I can subtract 343,200 minus 960,300. The answer is 617,100. That is the trade receivable at the end of June, and that is the trade receivable 617,100. That is the trade receivable at the start of July. It is going to be the same, obviously. This is how we are going to solve the trade receivable budget in that manner, which is obviously not an easy task. It is technical, I can understand. Now we are going to go for the production budget, which is very easy. Now we have a easy solution. Units sold. We know that add closing units. We used to do that very often. Less opening units, and we will get the units produced, and then we can multiply with kg required for production, and then we can find the budget order. Units sold for May, we can write that is going to be 24,200. Here I have written 24,200. Add closing units, that is the 25% of the next month's sales for May. So if you just go for it, 24,200. So the closing units is the 25% of next month's sales, that is 6655. And the opening units is going to be the 25% of the May sales. Why, sir? Because April के जो ending units है बेटा, वो May की sales का 25% है. So that is 24,200 into 25%. We will get 6050. So we'll get the production budget 24805. Answer is 24805, and that is going to be our production budget. Now next, units sold in June, we know that is 26620. Add closing units less opening units. Opening units are going to be 6655 because the closing units of May is going to be the opening units of June. Now the problem is this, that we need to find the closing units of June. That is difficult point. Beta, remember that it is clearly stated that after June, for July, the sales is not going to increase. So it means that July sales are going to be the same, 26620. And July sales is 26620. So 25% of July sales is going to be the closing inventory of June. So that is again the same 6655. So we can find the units produced, that is 26620. So we have prepared the production budget very easily and comfortably. Now we are supposed to prepare the purchase budget, where we have seen that each unit requires 4 kg of direct material, which costs 1.5 per kg, and the closing inventory is 50% of the next month production requirement. So I can start right from here, but you can prepare it separately even then. It is always better to prepare separately. I will write here, but kg per unit, that is 4. 4 for here, and 4 for the next, and 4 for the next also. For July also, it is going to be the 4. So we have going to be the material required for production. 24805 into 4. Let me calculate. 24805 into 4. That is 99. I will write here 99220, and here 26620 into 4. That is going to be 106480. And for July also, the production requirement is going to be the same because the units produced for July, we don't have the units produced for July, sorry. So that is the material required for production. And now I'm going to add the closing units for material required for production, the closing units. That is 106480 to 50%. And for the next, because the production requirement is going to be the same for July, so we will get the production requirement. And less opening will be the previous. And 1.5 per unit will be going to be our, what should I say? 1.5 per unit is the price per kg. So you can find the price per kg also in the same manner. So I hope so that you got the point. And now you can solve it on your own, because you will do, I don't have the time required. What you will do, I will add closing raw material here. Closing raw material and less opening raw material. Right? You will get the raw material purchases in kg. Then you will multiply it with 1.5, which is the price per kg. Here it is written 1.5. You will get the raw material purchases in dollars, as we were doing in the previous question. Right? Now the closing raw material is going to be the next month production requirement, which is 106480 will be the closing raw material. And for opening raw material, we have the opening raw material 6050 units into 4. We will get the opening raw material also, because opening units are there. Same is the case with here. The closing raw material is going to be the 6655 into the production requirement 4, and minus the same will come, because it will not change, because the closing units and the opening units are going to be the same. There is no difference in that. So the amount will remain the same, 106480. There is no change. Okay. I repeat again because the time is short. For closing raw material, I can find 50% of the next month production requirement. I will get it. But I can also find like this, that closing raw material is given 6655. So if you multiply it with 4, you will get the closing raw material. That is going to be 53240. 53240. And here also you can write same 53240 because this will not change. And opening will also not change. It will remain the same 53240 for this. And less opening raw material 6050 into 4. That is going to be, let's subtracted 49610, and we'll get the raw material purchases in kgs, and then you will multiply it 1.5 to get the answer. Because we don't have previous kgs available or production requirement available, that's why we are multiplying the units into 4 to get the amount. Because units are available and kgs are also available, you can do that easily. Okay, any problem till here? Now you can solve the remaining